I said
Yes.
S.C.C starts from signal, confirmation, and continuation. So when you
Yes.
identify the market structure, because the first thing you want to do is identify the market structure, where the market is going, if it's buying or if it's selling. So
Okay.
if you know that the market is buying, if you notice that the market is buying, you want to apply this S.C.C strategy into that market, into that uptrend. You
Okay.
understand? So if the market is selling, which is a
Okay.
downtrend, once you've confirmed that, you want to apply this S.C.C strategy into that downtrend. And for example, if the market is making, and unfortunately, if the market is going up, it's going to make a series of higher highs and higher lows, right? It's going to make a series of higher highs and higher lows. That's for sure. So what you want to do is you want to identify the highs and the lows of that market, right? You want to identify the highs and the lows of that market. So once you see the highs, which is this high right here, or let's just adjust it, let's make it bigger. So once you see this high right here, this is the high of this market, and this is the low of this market. Now this is what you want to be doing. So over here now, these are the buyers, because the buyers are pushing the market upward. Are you following me?
I'm seeing you.
Yeah, right. So the buyers are pushing the market upward. So there comes a time in the market where sellers, they will jump into the market, and they will fill that order and try to take the price back down, because if sellers are in the market is going down. If buyers are in the market is going up, right? So what you later see because of these sellers jumping into the
Okay.
market now is the market will start selling. Market will sell to a point, because this is an uptrend. Because this is an uptrend, whatever the case may be, the battle between the buyers and the sellers, the market is still going to buy. It's still going to go up because it's an uptrend. You get it now? So this selling happening right here is not important,
Yes.
but it is still important. It's not very, very important. This is not the major thing. This is just the minor thing, right? So this is how the market moves. The sellers has to participate with the buyers for the trends to happen, right? So now the buyers are pushing the market, and they reach a limit. Sellers jumped in, and they start reversing the market to a certain point. Because this is an uptrend, these buyers will not allow these sellers to push this market lower than the buyers. This is an uptrend, it's going to continue to go higher. So what the buyers will do now, they will jump in again, because they want to create that trend. Buyers want to create that trend for themselves, all right, to make money. So they want to put a lot of money to create that trend for themselves and push the market higher. So you don't want to be trading in this scenario. You want to only notice what they are doing and find the signal, which is this signal here, and find the signal of either direction. Either case, buyer might push the market up here and sellers might still push the market down here. It's possible. So now you're not looking for buy anymore, you're looking for sell,
Okay.
right? So now the market is at the middle. You don't know what to do yet, but
Okay.
wait for the signal. Now what is the signal? Now you now see that buyers, because they're the one that started the trend, buyers now jumped in again, hold the price at a certain level, right? It might be even from this level here, but not lower than this. Get it? So now buyers jumped in
Okay.
at a certain level. They now push the price all the way up, taking out these sellers that was pushing the price down. So the buyers took out these sellers, and then they locked in their price, right? So now this now give you a bullish sentimental idea that the market is going to buy, which is the market now gives you this signal. All right, so it gives you the signal that okay, buyers are in the market,
Okay.
that they want pushing the market now. So but you are not sure yet, because anything can happen. The market can still just do something like this. You don't know, right? So we want to
Okay.
we want to confirm this signal. We want to confirm this signal, if this signal is correct, if buyers are really in the market. So now, what is the confirmation? Now you see that price, these sellers now, you see that after these buyers exhaust their order at a certain point, these sellers will jump in again. They will start pushing the price downward, just like what they did here. These buyers push their price, they exhaust their order here. Sellers jumped in, try to push the market. Buyers said no, they push the market, make a new high, right? So they exhaust their order here. You find out that these sellers again will jump in again, want to do the same thing over here again. They'll push it into this zone below this their former price, because they want to try to take control. So as soon as they bid the price lower, for you to just be patient and wait for them to bid the price lower again. Because this thing that the buyers did here, they are still going to repeat the same thing again over here. Right? So now this is a confirmation. How does the confirmation form? You want to see price, you want to see the buyer. As this price is selling, you want to see the buyer, you want to see the buyers holding this level. Right? You want to see the buyer holding level. Now you can see price consolidating a little bit. Right? Trying to consolidate, holding this level. This level is going to be held by the buyers, because they don't want the price to go any more lower. You see price consolidating, which is price is going sideways, not trying to break lower. You can see a weak candle drop in and then close above again. Right? The candle will not close low. You can see a weak, that is fine. That is not a signal. But a body closed candle is a signal. So a wick is not a signal. A body closed candle is a signal. Now you understand. So now, on a scenario like this, you can find out that the trend want to like break, but at the end of the close of that candle, the candle will close above.
It will be a weak candle.
That will be a wick. That is showing you that the buyers don't want the sellers to take control, because if they can break below that level, they are not likely to take control. So the buyers will bid up that candle back, bid that order back, and then close it. You get it now? And they close it above their zone. So now what you find out that buyers will start taking control. So buyers will start taking control, start making a new high. So you now see the price reversing back up. Now once you notice that the price is reversing, what you want to do is wait for the price. You do this, notice these sellers over here. These sellers that push this price down here, they are the one that jumped in over here and try to bid the price lower over here. But once you see price above this level that the buyer broke, once they broke the level, give it the signal, and then you come back, you confirm that the buyers are holding this level, trying to pass the price and continue the trend. Now you want to hold on, you want to be patient. But as soon as buyers are bidding the price over close to this zone, and then they break this zone again, and then they close the candle. Now wait for the candle close to happen. Once the candle close happen above this level right here, this former seller's level, once the candle close open, now this is your continuation. Now we've had our confirmation over here like this. So this should be our confirmation. Right? So let me put in text. Stand. Okay, this one is a little better. Let me call it out. So this is our confirmation. And this is our signal. Right? So what we have here is the signal when price break above this seller's level. Now we have the signal. We want to wait, we want to be patient. Now we want to see the buyers holding this level after the sellers has pushed the price below this zone and trying to take control. You want to be patient and wait for the buyers to hold the level. Now you see price consolidate and then start pushing back upward again. As soon as price close above this level, this is your continuation. This is your continuation, because now that you've confirmed it, now that you've confirmed this signal, the continuation from here, the price is not likely going to make a downtrend again. it's not likely going to make a downtrend again, because now you see that this first place here, the sellers put their orders over here. The sellers are here, their orders are in this black line right here. So all the sellers order in this black line. But this order right here in this black line have been taken out by this buyer, giving us a signal to the upside. But these sellers jumped in again. They try to push the market downward, right? So now they try to push the market downward. Meanwhile, they are in control now, the sellers. But the buyers hold the level. They hold the level and they push the price backwards. The reason why I told you to wait for a body close candle above this place is that the price can get to this zone and not close above, because this is the seller zone. You get it now? So this seller zone, they get their sell order before from this zone, and which works for them, right? They can still initiate that sell order, the opportunity for them to take advantage of that previous price. You get it now? Because that price looks good to them. So that's why they sold at that price the first time. Now, when the price gets to that place, they'll be like, this is our former price. I think we can take control from this market from our former price. They want to beat the price from here. So this thing can happen. The price can sell from here. It's possible. That's why I told you to wait for a body close candle. So this body close candle also liquidate this order if there's any order here that's going to reverse the price. So take out this order here. So meanwhile, there's no sellers here. This zone again, there's no sellers. If the body candle close, there's no sellers in this zone again. Now you want to continue the trend, this buyer's trend, because definitely the trend is likely. We notice that after a high, a lower high, going to have, after a higher high, you have a higher low, you're going to have a higher high. Now over here, we have, let me indicate it, higher high right here. We have a higher high right here, and the price makes a higher low right here. What is price likely going to make again? This is the low. This low here.
Hello?
Can you hear me? This is the low.
Yes.
Right? So
yes.
This is a higher high. Right?
Yes.
So this is a higher low.
Yes.
So let's start from the beginning. So this is a low, a higher high.
Okay.
A higher low.
Yes. A higher low. A higher low.
Higher low.
A higher low.
To happen again.
Higher high.
Which is this higher high.
Yes.
You see now? So this higher high right here now is your continuation. This higher high is going to happen. You cannot avoid it. Get it now? So this higher high, this massive move there right here is what you are going to catch. So once the price closes above this place, which is your confirmation, now to continue the price, continue the press your entry right at the candle close. At the candle close, you want to place your entry right here.
Please show me. Okay. Please show me candle close.
You said?
Please show me candle close. Okay. Although you see going in the chat, sir. Okay.
I will explain these things in chat.
Okay. Sorry, sir. Sorry. Okay.
So at the candle close, you want to put in your order at that candle close. You want to press your buy that candle close, and then put your stop loss below this level that the buyers hold. That level that the buyers are holding. Okay. You want to put your stop loss there.
Yeah.
You want to target for maybe 1 to 2 based on risk to reward, right? So that 1 to 2 risk to reward, it makes because the market is likely to make that 1 to 2. It's going to be easy to get. Get for the higher highs. So after the higher highs again, you want to see sellers trying to push the market back down again, make a higher low. And then buyers will now still hold this level, allow it to consolidate. Right? So buyers will still hold right here if they want the trends to go any more higher. Then what you later see, don't forget this high. This highs is the highs of the sellers. Right? So this highs of the seller was broken This gives us a new higher high. Now once the price retraces, it cannot go all the way down this one that goes into this zone. It might be at the top of this zone right here. And then once you find out that price is trying to look at this high right here, once you find out that price is trying to make its way back to this high, once it creates a high, once it makes the body close candle above this high right here like this is also a continuation signal. Now this first one that happens right here, this is the second signal whereby you take your profit right here. Once you notice that the trend is going to continue, you want to be patient for confirmation. Now the price of the sellers will push the price back down, right? So what you want to be doing at this selling range from these sellers is for you to be patient and wait for the buyers to hold the price. Once you see that price is no longer going down, no longer selling, it's trying to hold. You want to pay attention at that time. So you want to be on your chart, paying attention to see the market structure. So once you see the price now start breaking new highs, you know that the price is selling from these sellers before. These sellers, once you see that price is holding, no longer going downward, and you see that price is making a new high already. Once you make a new high and close, you want to enter for another buy again. You want to put your stop loss below this low that the buyers hold, and you want to target these highs right here, the former highs that the market created for your second profit. And if you look, it's almost 1 to 9, which is also 1 to 2. You can just target 1 to 2 because the market can wick and take your profits, right? So this is also another way to continue the trend, right? So first thing you want to do for the signal, then you confirm it, wait for the buyers to hold the price, and then continue from the candle close of the previous highs that was broken, which is this highs that was broken. Once it's confirmed, the candle close above this highs that was broken. You want to enter from this place, stop loss below, and then target. You can as well target this place for profit, right? I mean, if this high makes sense to you, if the risk reward makes a lot of sense, you can just target it for profit, or you can just target 1 to 2 or 1 to 3, 1 to 4, whatever the case may be, right? So, but I recommend 1 to 3. Right? 1 to 3. Yeah, because it can maximize your risk to reward, like your win rate. You can maximize it. 1 to 2 is also for consistency, right? You want to be eating take profit all the time. So 1 to 2 is a lot of sense. So 1 to 2, you can quickly eat, take profit, and get out of the trade, and then you are done for that day. 1 to 3, you can wait a little bit more longer because you want to make it a little bit more. Makes sense. Yeah. So
yeah, sure.
In the second scenario right here, you also want to wait after the signal to the upside. You also want to wait for a confirmation. Now this confirmation varies, just like this one. It comes all the way down to this place before the buyers could hold the price. Now the buyers could hold the price at this high, this higher high at this level. The buyers could hold the price here, and they start bidding the price higher again, right? So whatever the case may be, just wait for the buyers to jump in. Once you see that they are trying to make new higher highs, then after the body close of the recent highs that was broken, which is this high right here, this recent high got broken. Once the body candle close, that is where your entry is coming from. If you miss that entry, well, you might as well just jump in late and still try to make some money out of it. But the candle close is going to be your entry. You understand? So in the same case where you are selling, if you are selling, let's just draw the diagram right here. I just want to draw the diagram right here so you understand. Like this. So the first thing first, this is our highs and this is our low, right? So what we want to be doing, first thing we want to do in the market is identify our highs and our lows. Now the price is right here. We are not doing anything yet because we don't know whether the price is going to go up or the price is going to go down. But now we see that the price broke this low, giving us a lower low, right? This was the high, this was the lower high. No, this was the high, this was the low, this was the lower high. Yes, this was the lower high because this high right here is lower than this one. So it's lower high. Then we have a lower low. This lower low is lower than this one. Right? So this is the high, this is the low. This is the high, this is the low. Because we are in between right here now, between the highs and the lows. We don't know what the price is going to do. If the price breaks above, it's a higher high because this is a high. From here, if the market broke, it's going to be higher high. Right? Now, this is a high. If the market broke below, it's going to be a lower low because it's lower than this one. Right? Makes sense?
Yeah, sure.
So now the price is right here, and the price makes a lower low, which is it breaks lower than this one, which giving us a lower low. Now this lower low, what you later see is that buyers will try to step in from this lower low. Buyers will hold the price just like the normal do. They will hold the price, and they will bid the price higher, right? So they will bid the price higher. So don't forget that this price of these sellers, of these buyers right here, buyers are used to this price right here because this is the high, this is the low. So it's like a balance between the highs and the lows. So buyers are used to this price, and sellers are used to this price also. So now what we later see is that these sellers right here, they jumped in, hold the price of these buyers, and then they push the market, creating a lower low. And then these buyers now hold the price because they will definitely do that. They will see if they can bid the price higher than the sellers. It happens in the market randomly, right? So buyers will later bid the price, right, upwards. Now don't forget that this move that happened from these sellers right here is a signal. It's a signal, right? Just like what happened right here. Just like when the buyers bid the price, creating the higher highs. Now this one is the higher highs, but right here lower low. So let's identify this right now. This is the lower low. Now this is a low. This is a low. This is the high. Right? So this is the high. And this is a lower high. So this right here, this move right here is your signal. Sorry, let me call it out. This move right here is going to be your signal that the market is making a downtrend, which is the market broke below this low. So this is a signal. Now these buyers right here, they will not jump in to see if they can push the price higher than this lower high, creating a higher high. If they can create a higher high right here, they are already in control. If they can create a higher, meanwhile they are already taking these sellers right here, and they are already taking the second sellers right here, and now they are not in charge because of that higher high. But that is likely not going to happen because this is the sellers market. It's a downtrend, right? So if the downtrend want to form, you want to wait, you want to confirm it, and you want to continue from that downtrend. So first of all, we have our signal, which is this move right here. Now, buyers basically
this is lower low now.
Yes. What?
So
yeah, right. This is the lower
low now. There's that place.
Thank you for the correction. So this is the lower. So that's correct. So once you see buyers, now this signal right here, you don't want to trade this signal. No, you don't want to trade this signal. Then once you see that buyers hold price and they start bidding the price to see if they can create a higher high somehow, what you will later see is that these sellers, they will come back again.
They're still there.
So yes, they will not hold the price, and then you see that price will start consolidating, creating a double top, double top, head and shoulders, all those kind of things, so that the price want to go any higher. So this is where all those patterns, all those candlestick pattern form from. This is where because the sellers price to go any higher. Now if the price hits this level the first time, sellers will sell it. Buyers will push it back, the sellers will sell it again, then the buyers will push it again, the sellers will not push it, creating this big momentum. This big momentum now. Once the price closes below this former level of the buyers, don't forget this is a buyer zone. Just like this was the seller zone. Yeah. So now once price closes below buyer zone right here, once it closes buyer zone right here, this is where you are taking your sell order from. Once it closes, once it is not closed, don't take it. Once it closes, take your sell order, put your stop loss below this high right here that the sellers hold, then target this place for profit. If you can see that maybe there are other place you can actually target from the chart, you can actually just maybe let's just move this backward like this. Let's just see the chart comes from this place. So if this is okay for you to target, you can extend your profit all the way to this place. But psychologically, let your mind be at this zone right here for your profit, right? So let your mind be at this place for your profit.
So that the market will not reduce and take your profit.
Yeah. So once price get to this place, if the body candle close again a little bit, if the candle close, then you are good to go. But before the candle close, a consolidation might happen right here. If it happens, watch for it. If the candle close, then you can hold the trade, right? You can hold the trade. But if it did not close and you see that price is trying to come back up, what you want to do for your risk management, you can break even, move your stop loss to your entry point so that you don't lose any money, or simply just leave your stop loss and just believe that the price is going to get, and just hold the trade, right? So this is how you take your setup. You can see that it's very clean, very easy, and it's very plain. It's just for you to wait for the signal, which is your break, your confirmation, the retracement, and wait for the buyers or the sellers to hold the price first, maybe at this level or at this level. Once they hold the price, wait for the break to the downside or the upside. Once the candle closes above these former highs or lows, right here, take your entry, your stop loss above, and the target reasonable place that you know that the market is likely going to hit. Meanwhile, where you are targeting, if you are selling now, this market that you are selling now, this market, if you are targeting, you are a seller because now you are selling. You are a seller. You want to sell your orders. Now you are a marketer. You bought something. Now you want to sell that. Who do you want to sell it to?
That is the buyers.
The buyers, correct. So the buyers are the people that is going to walk into your store and buy from you. You as a seller, you sell to them. So you selling from this place now, you want to sell to this buyer because buyers are in this place. Buyers are here. And you want to hold the price to this place. So sell your orders to them, take your profit, take your money, and get out of the market. Do you understand?
Yes, sir.
So that is all for this S.C.C strategy. This is how you want to be approaching your market. This is how you want to approach everything. It's easy, it's clean. So you want to make it more likely. This should be your confirmation. And this move right here is going to be your continuation. First, you want to have your signal from this place. The buyers will push it, sellers will hold it. Confirmation that sellers are in the market. Once they bid the price below this place, this level of the buyers, the previous buyers, once the candle closes, you want to enter from this place. Stop loss above.
I want to ask you about the week. All those weak rejection, are you counting it in?
So those weak are likely, yeah. In the case of liquidity, most people use the week as a liquidity. but the body close candle is where price is really at. Once price close at that level, that is where the price is really at, right?
Okay,
so
because sometimes I get confused with those weak rejections.
The week of a candle, just like this. Can you see what I'm doing right here?
Yes, you can see.
This is how a candle looks like, right?
Yes.
Let's work with this one. So this is how candle normally looks like. You can see that this this level right here. Okay, I think this is more better.
That's where the candle close.
This is the candle close.
Yes. That's in bullish candle.
Yes. And this
is the opening.
This is the candle opening. Now do you see this week now? This week right here.
Yes.
Now, so week is
that's where price is
what?
Where price got to before rejection.
Yes, this is where price goes to at a certain point of trading time, right? So let's just say the price opened this place, and the price opened at this level right here, this close right here.
Yes.
So first session whereby the price opened, the price was controlled by the sellers. Once the price was controlled by the sellers, the first opening hours of the trading market was controlled by the seller, which is the sellers push the price at a certain time with a certain price.
Yes.
So, but buyers now jumped in, now push the price back above the opening price. Because this is the opening price, it's going to count, right? It's going to count out. Okay, this is where price open at. That session at where price is going to open is going to be the opening of the day, of the whole day. Okay, this is the time, like 9 p.m. that the price opened. So that 9 p.m. that 9 a.m. sorry, that 9 a.m. is going to be very, very important information. So it's going to be how the candle closed or opened for that day. So the opening is very important. This week right here, just to show you that at a certain point in time, sellers were able to pick price lower, but now buyers are now in control. These buyers that was now in control, was now able to pick the price higher to this level right here. But this is not the actual price that the market is going to close for that day. It only went there, but that is not the actual price that the market is going to close. So now you see that the price start rejecting, the sellers start pushing the price, which is the battle between the buyers and sellers now happening right here. Now at the end of the day, when the market wants to close, the market closes at this level right here. You understand? Did you get me now? So the market closed at this level right here. So this is very important as well, because this is the opening and this is the close. The opening and the close, that is very important information. Are you there?
Yeah, I'm here now.
So what I want you to do is everything right here. I want to give you time to take a screenshot of these things right here so that you understand.
Yeah, I've already done that.
That's nice. That's quick. Makes sense.
I've already done that.
So you want to take a screenshot of this. So do you understand this candle close? This is a candlestick.
Sir?
Do you understand the candlesticks?
Yes. Well, some of them. Although I don't have time yet to study candles and their names, because sometimes my head hurts when I'm trying to study those candles, like trying to carry them off it.
Candlestick doesn't really matter. If you understand the structure, candlestick does not matter, does not count. The only way if you want to use it for The only way candlestick counts, if you want to use it for confirmation, then you can
Okay,
find
yes. In that
a
confirmation side now. But you say you are going to show me in the chat, so I'm waiting for that too.
Yeah. We're about to jump into the chat now.
Okay.
Let's go
I
to
understand everything you taught me here now.
yeah.
So it's just for me to be applying it on my own. Just I'll need to do more learning on this particular thing now. I think this is the basic. If I can be able to get this now, the way you explain it to me, then I think I'll be more happy.
Yeah, good.
Because it's like this is the secret, the inner secrets.
Yeah.
I was using a order block before. Sometimes you'll be waiting for market to get to your order block, and then market will just be be going, and it will not get to your position throughout the day. You might, say they me fast or something like that, because I really, money matter.
Strategy, you can trade it on any time frame, but the time frame I recommend you trade it on is, you can see my time frame here. The time frame you're going to be taking your entry from.
You're always using 1 hour.
The 15 minutes is where you're going to take your entry.
Sir? 15 minutes.
Your 15 minutes is going to be your entry.
Can you hear me?
Yeah, I can hear you. Look my screen.
So you will teach me how to use 1 hour and that 15 minutes, how to combine it together.
Yeah. You see what I'm doing right here?
You're recording this class, right?
Sure.
Please, I will need it when you are done, please. I forgot to tell you the other time. I forgot to tell you to help me to send, because I cannot record. My phone is full. Sir?
You can watch it on the YouTube channel.
Sir?
You can watch it on the YouTube channel, TradeByHoncho.
Okay, it's on your YouTube.
Yeah, TradeByHoncho.
Oh, okay. No problem. One hour analysis for our trend confirmation.
So what I want you to do now is for you to take a screenshot of this, and then we'll jump to the next class.
Okay, sir.
Do that now.
Let me do it again. Okay, sir.
Are you done?
Okay, it's done, sir.
All right.
Yes, sir.
Фотография твоя, горят воспоминания о тебе. У камина в 6 утра, разбитая душа, и все твои обещания, пустота.
I will send you a new link.
Okay, boy.
Подарил мне боль. Устал я жить, все обиды тая. Уходи, за собой закрой. Сколько бы я не просил, но ты же знала, что меня теряла. Я босиком по стеклам бегал так упрямо. Если бы не твой милый голосок, я бы упал, сделав последний вздох. И звезды мир на батаре, как будто для меня. Я каждый раз загадывал тебя не потерять, но больше не могу, я просто мучаю себя. Теперь ты пожалел меня. В камине в 6 утра.
Are you seeing my screen?
Yes, boss.
Can you see the chat?
Yes, boss.
All right, good.
У камина в 6
I'm gonna make sure that something is correct right here. So you can see everything on your chart now, right?
Yes, sir.
Why?
Sir?
All right, so let's continue. So everything over here has been explained so far, and I believe you got all the idea. So the ideas right here,
Yes, sir.
the last information right here is the 15 minutes for your entry, your 1 hour for your analysis, your 4 hours for your trend confirmation and analysis. You can use your 4 hours for your analysis, and you can also use it to identify your trend, and as well as your daily. You can use your daily to identify the trend of the market, right? So you can use your daily to identify. Matter of fact, let me just add it right here. 1 day. Trend confirmation. So you can use your 4 hours for the trend confirmation and then your analysis. You can use your daily for your trend confirmation. Doing your analysis on a daily is by you have to wait for a very long time for certain things to happen. Like you have to wait for days for you to find your signal. You have to wait for days for you to find your confirmation. You have to wait for days for you to start now like trying to follow the trend continuation. So I prefer you use the 4 hours for your analysis for your trend confirmation. Then use your 1 hour to refine the analysis and 15 minutes to enter. Use your 15 minutes for your entry. Alright, without any further ado, let's jump into the chart. This is the chart of USD shelf, USD shelf. And you see the chart now?
Yes,
now, let's jump into the 4 hours. Now we are on the 4 hours right now. You see? Look at what the 4 hours is showing us. Now, when you're looking at your chart, this is the idea I want to point out to you. This is very, very vital. When you're looking at your chart, you don't want to be looking at the previous data of the chart, as all these are not important. You get it now? If you're looking at the previous data of the chart, they are not important. They are not going to give you information for you to place a trade. Right? So the information we want to be using is our signal, our confirmation, and our continuation. So what we want to do now, I don't know if we can bring any of these right here. Since, okay, let's bring this. Matter of fact, let's just leave it alone. Let's just work with this. So looking at your previous chart this way like this does not give you the idea that, okay, this market is really going to buy or is it going to sell. Right? What you want to be doing is focusing on the present information that is given to you. Now, the information we want to be using is this information right here. This is what we want to be using. As of all this information right here, they are not important. Do you understand?
Okay.
So this is really important. While looking at your chart, don't look at the previous information. If you want to look at the previous information, just go to daily, and daily will just show you,
Okay.
the trend. Like I told you before, that daily is for trend confirmation, which is 1 day. So if you come to the daily now, let's start from the daily. What is the daily telling us? What is the daily telling us?
Bullish. It's telling us that the market is bullish.
Okay, overall trend, what is happening here? You've already taken screenshot of this, right?
Yes, boss.
Let me just delete it. So now, what is the daily telling us here? What is happening here? The daily.
But market is buying. It's bullish. Okay. That is bullish structure.
All right. So, but if you see the overall trend, everything is going down.
Yes.
Down. But over here, it seems like the market broke, right?
Yes.
From this downtrend, it seems that the market broke from this place, trying to make a new trend. But this is not also important. What you want to do is, when you jump to your daily, you can see this move right here. This move right here is a bullish move. So this move is telling us that price is currently bullish, right? So now price is bullish. So what you want to do is, you want to jump to 4 hours. You want to jump to your 4 hours. So now, if we want to catch this trend that is happening right here, let's not focus on this present information. As of, we want to apply the S.C.C strategy to this chart now. Let's see how effective it is, right? So let's not focus on this. Let's focus on this entire move right here. So first thing first, what we want to be doing, where did this low start from? Where did it come from? It comes from this high right here. It comes from this high right here. You understand? So now these highs are the highs of the sellers. Is that simple enough? These are the sellers. They are the one that sold the price all the way from this place to the downside. These are the sellers. Now, once the sellers did this move right here, once the sellers make this move right here, what happened next? Like I told you, the buyers will jump in to see if they can beat the price higher again. So now, this trend has ended. Now the buyers now jump in, which is these buyers right here.
Yes.
Now, what are we looking for now? We are looking for our highs and our lows. Right? So now this is our low. This is our low. And this is our high. The market give us a new high right here. So we are working with these 2 highs and lows. We are working with these sellers and these buyers right here. So we are working with these sellers and these buyers right here. So now, like I told you before, I told you that once the buyers are pushing the price upward, the sellers at a point in time, they want to jump in to see if they can beat the price lower. But these highs and these lows, they are just highs and lows. We don't know yet if the market is going to make a higher highs or a lower low, right? Which is why the market end up here. If the market is going to make a lower low, the market will break this buyer's low right here and make a lower low. Does it make any sense? Now I want you to just pretend like you don't know what's happening right here. All this have never happened before, right? So now we see that sellers push the price all the way down, but it didn't get to this level and broke it with the body close candle, right? So meanwhile, these buyers and these sellers, we have no confirmation yet. So because this is the 4 hours, you want to be patient for these highs to be taken out or this low
Okay.
to be taken out.
Okay.
So, right, this can mean a week of no trade. This is when you be accurate. Now, when trading with the 4 hours, you don't want to be scalping. Do you know what scalping is?
Scalping.
Yeah, you don't want to just enter a trade and then see a little profit and then take it out of the market and just close your trade. Enter another trade again, take another small profit and then close. You don't want to do. You want to position your trades. Like you can place a trade today, and you know that the trade has the possibilities to get to this zone, and when it gets to that zone, it's going to give you a lot more money. Why do you want to be stretching yourself to enter that same market that you can just position yourself and wait for it to get to that zone, take your profit? Why do you want to stress yourself to just enter and then come out again and then still find another opportunity the next day, that same market, still enter and then come out again, then the next day still find another opportunity to enter again? That is very stressful. Like you might end up taking the loss, lose the money that you won yesterday, and then try to make it up back, and then you are just trying to fight the trend instead of you to just place the trade, position, and then just catch all the moves. Once you are done catching all the moves, it might take 2 days, 3 days, 4 days, and then you are done. You make a lot of money in 4 days. In 4 days, you bags thousands of dollars or hundreds of dollars. That makes a lot of sense in 4 days, right? So you don't want to treat trading as one kind of picking money from the gutter or stuff like that. It's not a get quick rich scheme, all right? So you want to trade this as a business. In a business, you want to be patient, right? So once you place your trade, once you position your trades, let it run, let it swings. Once it swings, once it runs, it's going to give you all the money you want for that week. Even if it's 2 weeks, you can hold your trade for 2 weeks, and then you will not bother of doing analysis again, just for you to just be checking the trade. If the money is enough for you, you can close. You can close and reposition, find your signal again, find your confirmation again, and then continue. That's just it. You don't want to be jumping in and out, in and out. No, doesn't make any sense. You want to position yourself for the next 2 days, 3 days, so that in the next 2 days, 3 days, you already know what price is going to do, right? You can also add more position to that trade. If it's that strong, you can add more position, and then you just milk all the money away from the market. So let's continue. So these highs and these lows, which is these buyers right here and these sellers right here, we don't know what they are doing yet. So around this place, they are just playing around with the price. So we want to be patient for us to see one of these highs or lows to be taken out as our signal. Do you get it? Are you there?
I think the thing cut, but it's connecting back.
Can you hear me now?
Sorry. Yes, it's clear.
So we want to wait for either highs or lows to be taken out to see what the buyers and the sellers are doing. So over here, right here, we saw that over here, right here, can you see it?
Yes.
We saw a signal to the upside, which is this signal right here, that the buyers are now in control. So now the first thing that we have identified is our signal right here. So now we don't want to trade this signal like I told you before, right? So we don't want to trade this signal. So what we are now doing is waiting for the confirmation. And that confirmation, I told you that wait for the buyers to hold the price. Now, what you later see that these buyers that right here, they hold the price at this level right here. Can you see it? They hold the price at this level right here. So once they hold the price, you see that you had the first low, price gives you that bullish momentum, and then price come back again, holding that level. You go any lower. Now if you zoom in, you can see what happened here.
Yes.
You can see what happened here. We had a week in this place. We had weeks all over this place. Can you see it? We had weeks all over this place. But these weeks did not break the low. Do you understand? It did not break below.
Yes, sir.
So while it's supposed to break below, but it closed and then give you this bullish momentum to the upside. Now this, you can actually, maybe on the 1 hour, you can like adjust the analysis and then take your trade from here. But what we see is that once price makes this lower high right here, it makes another lower high right here again. Can you see it?
Yes, sir.
Let me draw it for you. This is our signal. This is our low. This is our lower high. This is our lower low. On that lower high again, price could not break higher. Can you see what I'm doing? Then
Yes, sir. I'm saying.
Another low. This low right here. We have another lower high. This one was not lower than this. We had lower high right here. Then we're supposed to have a lower low, but the wicks gives us that rejection, which gives us an equal low, and then we make a new high. You see what's happening here? Now, if you look at this place now, this place was a former, like a seller's zone. Sellers that pushed the price all the way to this place. And then buyers kicked in with this big, massive candle, which is they are not taking over. So now this can be a signal. Do you understand what I'm trying to show you now? This can be a signal because it's the one that broke this high right here. So it's higher than this one. Now we now have a higher high. This high is higher than this one. This is higher high. This can be a signal. Now you see that the price retraced again to this place. Now this place, like this place right here, is now the seller's zone, the last seller's zone. This was the last seller that sold the price, and then buyers now jumped in, broke that seller's zone. That seller's zone now is now where sellers are resting in. There's no longer sellers in the market. This is the last seller. So now sellers again jumped in over here, which they will only do, see if they can continue this trend that is happening right here. See, they are trying to see if they can market lower again. These sellers right here, you see, they are trying to see if they can push the market lower again. But unfortunately, the market is just changing structure. And if you want to change structure, it needs the participants of the buyers and the sellers to change structure. So the sellers will likely show into the market, even if it's not going to the seller's direction. They will still want to sell to see if it can beat the price. But if the market really want to buy, it's going to go in the favors of the buyers. So now what you see is that this last sellers was taken out by the buyers, giving us the signal, and then the price retraced, giving us the confirmation from the buyers that they are still in the market. Now this confirmation, once price goes any more higher, once price goes higher than this high right here of these sellers, once the price breaks above and close with a body close candle right here, you want to take your entry from here, right? This is from the 4 hours. I'm just showing you for the 4 hours. You can enter from here, body close. Enter from here, put your stop loss below this low right here. As you put your stop loss there, you want to target these highs right here for profit, because once the price make a higher low, it's going to make a higher high. Then the higher high is likely going to break this high to make a higher high. Can you see what happened here?
Yes.
We are able to get a 1 to 5 risk to reward over here from this place. But this is when you scale down, you're going to get this entry. But let's use the original market structure of this market. Let's use the original one. So that is just to show you a little bit breakdown of how the market usually moves. All right. So now these buyers and these sellers, what we just learned just now, we're going to repeat it again in this bigger structure. Now we have our signal over here. The price breaks above, giving us the signal. Now what we have next is the confirmation, which is this confirmation of the buyers. The price. You can see that buyers are holding the price in this level. Buyers are holding the price. Now this is going to be your continuation from this level right here. This Okay, let me just use to highlight from this level right here. It's going to be your entry. Now, if you look at this zone that we marked over here, once price breaks, giving us the signal, then it retraces, and then buyers hold the price right here for the confirmation. Now, you want to wait for the candle close. You see this candle close?
Yes.
If you can see this first candle, this candle went all the way up to this place, right? It didn't close,
Yes.
and then it rejects back again and then close right here. And then the second candle opened, sellers took control a little bit, and then buyers finally took control, and then close above this gray line, this gray long line right here. You can see that buyers were able to close above this place. Once this candle closed like this, once it closed, this gives you the signal already that, hey, it's time to enter for your entry. Then if you are entering from this place, once the candle closed like this, once you entered, you want to put your stop loss below any recent low, either this low or just to be safe overall, because you're going to be holding the trade for maybe hours or the next day. If where you are targeting is a very large place, for overall security, you want to put your stop loss over here. And this is just like 57 pips, all right? Because this is USD share, not like gold that uses a massive stop loss. 57 pips, it's okay to use 57 pips. I use 100 pips stop loss. By using currency pairs, this is like 57 pips. So it's just half of the risk I'm taking. So put your stop loss right here. And then when you want to target this level, right? This recent signal highs. Remember that this was the high that gave you the signal before the retracement of the confirmation. And then now we are trying to continue the trend. We can target here for a small profit, and then once the market hits your profit, you close, right? But if you scale out from the 1 hour, and then you see that these sellers that sold the price all the way down to this place, now buyers are not jumping into the market. They are not the one pushing the price back up to these sellers. If anything is going to happen from this buying place, it's going back to these sellers. Because like I told you before, if you are selling to people that are walking into your shop to buy from you, right?
Yes.
And if you are buying, once you buy, you are going to sell to other people too, right?
Yes.
So you want to take this your buy right here. If you are confident enough that this buy is going back to these sellers, because they are the only strong sellers in this market right now. What you want to do is you want to extend your take profits to these sellers. Can you see what I'm doing? Extend your take profits to these sellers. Now, what you later see, if you are patient enough, you see that the market will start moving in your direction. So that the market will move in your direction, and then bam. Did you see how we entered it? How we took it back to the sellers? We took our buy back to the sellers. And now these sellers, they are likely going to hold this market right here. They will not allow the market. If the market can move and break above this high like this is going to be the new high. Once you have this new high will serve as a signal, right? Then you will now wait for the market to come back again to give you that confirmation, and then buyers will now hold the price as a confirmation. Then from this confirmation, you will now see buyers now making a new high. Once the price crosses above this place again, this level again, right? You want to take your entry from this place, put your stop loss below this place, and then you can target these highs, or you can just scale out and just target maybe this place, for example, just target here for profit, and then you can continue the trade like this. This move right here might not be as big as I drew it, but it can be that small or that big. But if it is so, you can just put your stop loss like this under this place, and then you just target the next highs. You can target this high right here, or you can just target the next high available in the market, right? Which is
Okay.
high right here. So you see how we caught this trade right here. You see how we caught this trade right here. So this is what you want to be doing. You want to mark your highs and your lows, and then wait for a signal. Once you got the signal, okay, this signal is going to tell you that the price is going to go like this way, this way, this way. Okay, for the price to go this way, let's go for confirmation. The price is likely going to start selling. Just wait for the sell to just happen. Once it happens, then wait for that continuation that the market is not trying to reverse back up. Once the price breaks this above this level, this seller's level before, this former seller's level, once the price breaks this level around there and then close with a body close candle, and then close with a body close candle right here over here. Once this closes, you just want to put your buy there, put your stop loss here, and just target the next sellers. Just find the next sellers in the market and then take your buys to that place. Even if it's a long place, just take it to that place. You get it now? So that is where all the buyers are taking their orders to go and sell. They will buy and then they will take everything to go and sell it there. And those sellers, they will carry all those orders. They will carry all those orders too, and then they will start finding buyers in the market to give that orders. But they too will make profit. I do not know how sellers actually make profit from the market, but you buyers, we know that if we buy, we have to sell, right? So those people that are selling, they must have bought from somewhere, from some suppliers, manufacturers. You know, they bought somewhere, and then they bring it to the market. They start now selling it because they are sellers. But at a point in time, they bought from somewhere, from some manufacturer, from some company, right? So the company that's manufacturing the product, they go to the company and then they bought from that company. They are sellers, but they have to pass through the process of buying before they can sell. So they will buy from the company and then they will not start selling in the market. Who you are selling it to, they are also buyers. In that same market, they will come, they will buy from you. You that bought from the company, the manufacturing company, they will buy from you and they will buy at a good price. If your price is not good, they will find another place to buy from. So they will buy at your price, which is this price right here. Okay, let's use this as an example. These people right here, they went to the manufacturing company, right? So they went to the manufacturing company and then they bought a certain product, a large amount of product. So what they are now doing now, they are not looking for sellers. They are not looking for buyers to buy the product from them because they are sellers. They are not looking for a buyer's market to buy the product from them because they are sellers. So over here, there were nobody willing to buy price that they are offering. Few people buy the price over here. That's why the price went up. But they still have more orders in their possession, right? So they have to sell it all. So unfortunately, they are now waiting. They are not in control already, but they are waiting for the buyers to come and buy the order from them. So now the buyers jumped in over here. They now collect few of the orders, right? Like maybe like 40% of the orders. That's why the market will trace 40%. You can see this move right here, all the way to this place, and then this retracement, just one retracement, cover almost half of this whole move right here. This retracement cover half. Let's just put this as 40%. Buyers bought 40% of their order. Then sellers, maybe because they have sold, they went to the manufacturing company again. They bought more orders again, right? They're not looking for more buyers. Then buyers stepped in again. They bought a little, and then the price went all the way to this place. Sellers got another order again, trying to push the market, finding more buyers to sell to, and then buyers finally took all the orders from the sellers right here. As soon as they took all the orders, the market makes a new high. Can you see now? See the psychology behind it? Once they took all the orders right here, the market makes a new high. Once the market makes a new high, then The sellers right here, they went to bought another, another product, see if they can sell it to the buyers right here, and the buyers, they have money now, they bought all the others again right here. They hold the price. Okay, how much are you selling it for? 200,000. Okay, 200,000 done. They collect the deal, they hold the price, and they change the direction to their own market, which is this move happening right here.
Okay.
That is how they were able to beat the price back to here. When did they beat the price back to? This manufacturing price of these first people that was looking for the buyers. Now the buyers are now in the market. They now bought the price. They're not taking it back to the sellers. The people that sold to them, they're not taking the price back to them for them to buy, because they now buy all our products. They're not taking it back to them. Okay, we bought at this price. They now increase the price, the value of the price. They now give it back to the seller's market to see if anybody will buy. So now that is why the price is back here at this level. And now what you see right here, is when price gets to this zone, this seller zone, the manufacturing zone, what happened? A massive rejection, bam, from this place, because these sellers, they are here. They love the price of this zone, right? It was the price that they bought from the manufacturing company, so they love the price. That's why they've already taken some order right here. That is why the price is dropping right now. So the price will react to these things.
Okay.
The buyers understand the price will react to who has the more capital. That is where the price is going to. That is where the direction of the market is going to be trending to. Who has the more capital? Who is in control? So this explains a lot why the market behaves in a certain ways. Once the buyers are in the market, once the sellers are in the market, they are looking for buyers. Once the buyers are in the market, right here, they are looking for sellers. Now, these buyers right here, they took all the orders, they're not taking it back to the sellers, right? When these sellers had the orders the first time, they were looking for buyers. So buyers bought all the orders. Now, buyers are not in control. Now, they take the price back to the sellers. And if these sellers can take all the orders of these buyers, they might as well start selling the market again back to these buyers. They can even break this buyer zone, giving us a new signal for a sale right here, and then we can continue. Or these buyers can give another signal, breaking these highs, which is this diagram that we draw right here, giving you the signal, the confirmation, the continuation. You tap your buy button, enter from here, put your stop loss below the low, then you target the next high for your profit. Simple as that. This is just using the market structure and using the S.C.C strategy. This is all you need. You can see this is very simple. This is very educational. Like, you can just bump into your chart. Let me just clear everything. You can just bump into your chart. Okay, what is happening? This is the highs. Okay, what is happening again? This is the lows. Okay, what's happening? Okay, let's wait for the highs or the lows to be taken out, which is this highs right here. So what happened over here? We have our signal. Okay, nice, cool. Now we see that price is making the retracement, giving us this low. This low now is the buyers holding the price at that level, right? You can see this one is very different. Price is really at this level right here. It didn't retrace much, but what you see right here is when price get to this level, we had a bullish momentum, right? We had a bullish momentum. So in most cases that you see this first candle close above this gray zone right here, this zone right here.
Yeah.
You can see that when price retrace, you will likely want to use this as a continuation because the price closes above here like this. So what you want to do, you want to put your entry right here, and then you put your stop loss right here like this, right? So what you see is you end up in profit. You end up in profit at some point, but you see that price will come back and then take you out and then start going your way. You see what happened? You start going your way. But what you want to what you want to do in most cases, scenario like this, what you want to do, you see this low right here. You see this low right here. When you are fixing your stop loss,
Yes.
you want to extend your stop loss, because in most scenario, I will expect you to enter from this place, or even if this place, I will expect you to enter from here, put your stop loss here, like this, and then you target whatever risk to reward you want to target. The market might still go your way, but it will take you out with a wick. You can see that this is not even a body close candle. This is a wick. It will wick you out and then start going your way, right? So strategy you are going to use, this strategy now is not going to be 100% accurate. It can give you 80% win rate, it can give you 70% win rate. In all strategy, there's going to be a loss. We can count this as a loss, right? If you want to be entering from this place, we can count it as a loss, which is fine. All right. So, but if you took a loss right here, you can still find another opportunity right here. Right here. Can you see the chart?
Yeah.
For us to be able to scale down over this place to see what happened right here, we need to go to the 1 hour. We've been on the 4 hours for a very long time, so we want to go to the 1 hour. So the 1 hour now, this was where we hit our stop loss the other time. So this place, now we have the highs, we have the lows. What happened right here between these highs and these lows? The market broke right here, giving us the signal right here, and then we have our confirmation right here, and then once price body close around this place, which is this big massive candle, for our entry right here, our stop loss is going under this zone. Where are we targeting? We are targeting this level for our profit, which is giving us 1 to 2. So you can see that even if you take a loss, regardless, you can still hit your profit. You see, even if you take a loss from that first trade, you can still take a profit. This is going to give you the signal, because now we broke above this high right here. This is signal. Now we retrace into that area. This is confirmation. Now price closes above here, because this was not the body candle close, this was the candle close. We put our entry here. Our stop loss is always going below. Put our stop loss there. We are targeting these highs for profit right here. So now we see that price makes all the way to our take profit. So regardless, even if you take a loss, you have the chances of winning 80% of the time using this S.C.C strategy. Do you understand? Are we clear?
Yes, boss.
All right. So this is all you need to know concerning the S.C.C strategy. Even if you take a loss, you are still going to repeat the same thing again. This is where discipline comes in. Even if you take a loss, repeat that same strategy again. Every time you enter the chart, you are going to be ahead of the market. Like, you are going to be aligned with the market all the time. You get it? So this will be all for today's lesson. On our next class, I will teach you how to use the Fibonacci to align with this strategy, so that you have more confluences. Like, you know where the market is going to retrace to before you start buying. So that is the Fibonacci work. That is what we are going to be using the Fibonacci for. So on today's class, we break down this S.C.C strategy on how to use it, how to take our entry, how to confirm it, how to wait for signal. So our signal, our confirmation, and our entry